So, in a recent edition of Code and Capital, I spoke about the SaaS-Maggedon that's been taking over our public equity markets and making a lot of venture and private equity investors quite concerned about the sustainability of the SaaS business model. I should say that a lot of these corrections that you can see here of our major software vendors are probably a long overdue correction from some pretty heightened valuations that we've seen. More and more companies stay private and less public. We've seen obviously increasing amounts of money driven into SaaS companies that are listed, therefore inflating valuations. I don't think anyone's suggesting that any of the companies listed on this chart are going to disappear overnight, but it has made many question, is this the beginning of the end of the long-standing SaaS business model, which is really predicated on winning customers, charging them per seat, irrespective of how much they actually use the software or not, or how successful it is, and then obviously trying to ensure that they get very long-term customers. I spoke specifically about Xero, who many people feel is quite disruptive with AI, probably in some ways a little unique to these organisations because Xero predominantly does sell into the small business market. So arguably could be more impacted by that. But as you can see here, these are companies that have incredible moats around their business, long-term relationships, and quite frankly, for many organisations, just simply the pain of change or the cost of change are just currently too significant to sort of abandon these products altogether. But many of the pundits have been making some interesting sort of suggestions that perhaps this does represent a bit of a shift in terms of how buying paper behaviour could change using AI and how potentially companies may want to consider building their own software. Recently, Goldman Sachs produced this report which sort of identified that they felt that the total addressable market for SaaS, so traditional software, would shrink, but we would see an increasing market of agents being sold as software. And I guess what's interesting about the business model for agents is that it'll be probably less to do with exactly what that means for selling per licenses, but we'll be probably selling against human labour. So it's quite likely that the cost of agents may be taken from where employee costs are currently taken from, and obviously the sheer point that Goldman Sachs is trying to make here is that the overall addressable market continues to grow. It's just that we may be spending that money in a slightly different way, and we're already sort of seeing some emerging evidence of the generative AI solutions who are looking to really include some industry-specific applications. I have noticed on my Claude over the last couple of weeks, we've seen the inclusion of some specific applications or plugins for developing specific use cases. So what I actually did in our Claude version that we run here is I actually added some of the plugins that they've been including. So Claude now has a marketplace on GitHub, and effectively you can they've built actually a whole fit for purpose bunch of plugins that'll work directly in Claude. The one that really caught my eye was probably the legal one. You can see here it does a whole bunch of sort of standard legal things, drafting NDAs, reviewing contracts, prepping for meetings, assessing legal risks, checking agreements with vendors. If you actually look sort of behind the scenes of what these actual plugins do, they're effectively just advanced prompts with a bunch of sort of workflow built behind the scenes, or pre-packaged prompts is how I would sort of describe these. But it certainly has given pause for thought for many of maybe the startups that are in this space to reassess these actual broad LLMs who provide the API or provide the AI to these startups, are they going to be competitors in the long run? It did catch my eye this week that Harvey, so our good old friends here at Harvey, are raising again. I wrote about Harvey extensively last year. They seem to be raising every 3 or 4 months, and the valuation sort of continues to grow. So I noticed here on the very same week that we've had SaaS-Maggedon and potentially the prospect of Claude eating into the SaaS market or the AI market for legal startups, that here we are with Harvey now increasing their valuation from 8 to 11 billion and raising another $200 million. So I guess the old story applies. Strike while the iron's hot. What does this all really mean? Well, it's certainly something we're grappling with, even for our own software business. But I think the reality is the playbook is going to change a little bit. So here's some things that we're sort of thinking about over the near term to sort of assess what does that actually look like. I think from a SaaS perspective, this has got a little bit of a way to play out, but here's what we think it means for our playbook, particularly with SaaS. So Firstly, I think what major companies are thinking about is that, are we going to be selling outcomes, not seats? So are we going to be selling more about what our software does, value-based pricing, rather than just selling someone a license and just hoping that it works for them? We'll be actually having to really sell the benefits of what that software does for them. And I look at, even the software we build and go, well, does this mean we're going to be selling more on usage, number of advice documents produced, time saved potentially? There's a whole bunch of interesting things that come with that, but there are some realities of trying to move to that model that people haven't thought through. Will we be selling agents, not software? Yeah, probably. I think at the end of the day, all agents really are a bit of automated software and workflow, and many software is simply that. So there is potentially that we'll be selling agents, not software. I think the words are a little bit interchangeable sometimes. What I would say, though, is there's a really big difference between buying a bit of software and having software support. So a lot of those big companies I mentioned at the start, they are making a lot of their money from service and support, and anyone that's sold software or uses enterprise software knows that you need a lot of support from your vendor to make it work. In my opinion, AI agents are going to be no different. So you're still going to need support from a software vendor to make your products work for you, and really this is the difference between, I guess, being a software application and being a software company itself. And the final one, I think the real challenge will be for major software companies is to, how do they use those moats that they've got in their business model, maybe their data moats, to do things that the general purpose AI solutions can't. So whilst a lot of those things I showed you in Claude before are general purpose, obviously there are industry specific tools that will simply do the job better, albeit more expensive. And so this will be a continued battle, I think, to determine for your product strategy how this is going to operate. The reality is, if I go back to my little Claude plugin here, though, is that we are seeing increasingly the ability to sort of start patching in a whole bunch of different applications into your enterprise LLMs. This is an enterprise version of Claude that we use. It's becoming really, really interesting. And so we have obviously plugins, we now have connectors. So we're seeing now a world where organizations start plumbing in a lot of data from different sources, and that's really changing the game in terms of how people are using AI, and potentially putting less pressure on some of these products themselves to build AI. So it's a really interesting space at the moment. I think there's a new playbook evolving. Overall, I do agree that Goldman Sachs have got this right, that actually the overall addressable market's going to continue to grow. This is a great industry to be in, albeit I think the monetization models are going to change significantly in the next couple of years.